great time as any to get in Prasad Baji, Senior Vice President at Edelweiss Securities, who joins us right now from Mumbai. Prasad, good having you. Thanks so much for taking the time out. Before we talk about our domestic stocks, just one word on how do you believe the commodities globally are shaping up and the impact thereof on, say, some of the Indian companies, because the China GDP numbers were pretty much in line, maybe 10 bips lower than what was estimated. Today, there's hope of a stimulus coming in from China as well, and Asian stocks are pricing that in. What's your own sense?
I think the global outlook is certainly weak. We have been talking about this for over a year, and it's been taken longer than we thought. But certainly even now also, I think for the next 6 months as we see, we don't see any significant recovery. On China particularly, earlier in the year itself we had mentioned that we would see 3 to 4% growth only in steel demand and production. And broadly that's what's planning out. It's been flat. In fact, we could even see some amount of production cuts in China in the later part of the year. So I don't think there is much to cheer globally for the commodity demand and outlook, especially on the metals and mining side.
The other concern is whether we'll continue to see a decline in margins. From an earnings perspective, what is your sense?
I think from the Indian context, I think we are having 2-3 silver linings. One is that volume growth, especially on the steel side, is still intact. For the first quarter this fiscal year, overall steel demand has grown almost around 9% of YOY. If you look at individual companies, they have grown between 10 to 20% also in volume terms. So obviously that helps earnings. Second, the rupee depreciation protects the Indian metal players from imports, and indirectly it has an effect on realizations. So if you take LME prices, even though aluminium for example is down 24% YOY in dollar terms, rupee is also down 21%. So the INR prices of aluminium for example are not as much down. Similar thing holds in steel. I mean, your steel prices YOY are flattish. So that is helping Indian metal companies. Second, there is some amount of cost relief. I mean, coking coal prices even in INR terms have come off to some extent. But if rupee goes back to 57, 58 levels, there could be some pain. But cost pressure are also easing to an extent. So I think for Indian companies the picture is probably not so bleak because of better volume growth, and the margins will not take as much of an hit.
Okay, let's talk about some individual pockets, and before we talk about earnings, just an update, Prasad, on your sense of what could happen today and the impact thereof, because we hear that the decision on the Karnataka iron ore mining ban might come out today. You think that it's about time that some positives could come out for companies such as SESA, JSW, or a couple of smaller ones at that too?
See, as we know, in April, the Supreme Court has allowed Category A mines to restart and has said CEC will conduct that process. I think today we'll get an update of where that process has reached. We are hearing from sources that 38 mining companies have submitted their R&R plans. There are news about 5 to 8 mines having got cleared, but there is no separate confirmation that we have got from CEC. So today we expect to see maybe some progress reported on that front. Second, we expect to see whether there is any similar lifting of the ban for Category B mines, basically the rest of the mines. So I think these are the two things that we look forward to. Honestly, we don't have a call whether it will happen in this judgment, but overall we do believe that Category B mines will also be allowed to restart in Karnataka in time. And over time, maybe 3 months, maybe 6 months, honestly, we again can't pinpoint a timeline. Mining will restart in Karnataka, and the limit that has been prescribed is 25 plus 5, 30 million ton totally. I think that limit should go to a run rate in the next 6 to 9 months. So it's a directional call. I don't know whether timelines, why it will happen today or it will get postponed.
Okay, what about Tata Steel? Now, the company has recently announced some production cuts at Port Talbot, and the company has mentioned that orders in the June quarter have been very weak in Europe. What's your outlook here?
Yeah, I think it's not a big surprise. Europe, obviously, environment demand is very weak. We are expecting at least 5% decline in volumes in Europe in this year. It could be a little higher also. As such, we'll obviously have to see how things progress. The only, again, silver lining here is as production aligns to demand, pressure on prices will ease off. I think it's already bottoming out from the pricing perspective. But I think, yes, volumes will remain weak.
Prasad, do you differ from the street on earnings estimates for any of the companies? Because the general view is that companies such as JSW, for example, will come out with a very lackluster set of numbers. A couple of companies, if at all, maybe some positives, but not too many great positive surprises coming in. Do you differ from this outlook generally? Do you have any positive comments or positive expectations from anyone or a couple of companies?
I think if you look just from the Q1 quarter, as the June quarter, I don't think there will be any much surprise on the positive side. Definitely, we'll have to watch for what is the movement on the cost front, because that one thing that companies do have on their hand is to try to cut the non-raw material cost, of which we have not seen much so far. But I think that from this quarter onwards, companies will try to start doing that, try to control and cut costs which are, at least to some extent in their control as such. The only other positive that can come is some of the long product prices have been slightly outperforming. So that could be a positive, but I don't think there will be much relief in that account, except if there is some cost cutting that we have not considered.
Prasad, before we let you go, really, a few counters by virtue of the fall that the market has shown might be trading or probably are trading below their book value as well. Typically, from the banking space, a lot of people are recommending banks trading at substantial discounts to the book. What's the strategy in metals? Is this a good time to probably start looking at some companies which want to be trading below book?
Yes and no. What I mean is that the challenge is that these could remain at book value. There are companies like Hindalco is much below book value, JSW is below book value. There are others who are at around book value. So from a long-term perspective, from a 2-year perspective, I think these companies should definitely show upside. The challenge is in the next 6 months, as I said, since the outlook is weak, we cannot expect that there will be one cannot foresee that kind of return from a 6-month perspective. So it is only from a long only perspective that one can look at, but not from a 6-month perspective.